Hi, this is Anthony and welcome to my show, where I look at various ways to increase your income, as well as investing in the stock market. Remember, this is not financial or investment advice. I'm not a financial advisor, just somebody on YouTube providing entertainment. But before we start, could I get you to please click the subscribe button below? It would really help me out in building a following on YouTube. Thanks. In a previous episode, I discussed my investments in Chinese electric vehicle companies. Like many people in 2020, I invested in Chinese EV-related companies back when prices were going up. And they weren't necessarily going up because of fundamentals, but because the market in general was going up, and there were a lot of people on YouTube and the internet who were discussing these stocks, which got people interested in being able to buy the next Chinese Tesla at low prices on American stock exchanges. I bought Li Auto, XPeng Motors, NIO, and 30 shares in KNDI, ticker symbol KNDI. One should probably be cautious when buying a stock in a company that spells their name like an exotic dancer, but too late. Very quickly, NIO kept on going up and up. The other companies I had bought pretty close to their tops. If I would have sold my NIO, I would have locked in a tremendous profit, but of course I didn't, and since then it's gone down, and I'm underwater in it. I'll talk about it and the other stocks in a future broadcast, but today I'm going to mainly talk about XPeng. But first I want to mention a little about KNDI, because I think that it illustrates some pitfalls, not just with Chinese stocks, but also penny stocks traded on American markets. I'm not going into the financials for KNDI, but the charts don't lie. The company loses money. The stock has been going down, and I'm concerned about all Chinese stocks listed on foreign stock exchanges. With the stuff that the Chinese government is doing with companies listed on other exchanges, including what they did to Didi, I just think that there's too much risk that these companies could get delisted from foreign exchanges, which certainly is not going to help the price. Also, because KNDI is at such a low price, I could see them doing a reverse split, which, as I pointed out in other episodes, when a company does that, stockholders who own their stock in certain brokerage accounts can get hit with a hefty fee for reverse splits. In the case of my broker, they charge $38 for a reverse split. And this is a discount broker that doesn't charge any commissions on stock trades. So sometimes you just need to bite the bullet and sell out of your losers, and that's what I did. I sold my 30 shares of KNDI on Tuesday, December 28th. Among the other EV makers that I had was XPeng, ticker symbol XPEV. I bought it in November 2020, pretty much at the high, and it bounced around mainly below what I bought it at for over a year or so. Recently I was back in the black on it, and I sold the last of my shares on December 31st with a total profit of about $70. All of these shares that I'm discussing are in my Roth IRA, so no tax will be due on profits, but of course if I have losers I can't take them against profits in taxable accounts. Here is some information from an online version of a recent South China Morning Post article. I've edited out some parts that are not relevant and for brevity, but for total disclosure, most of the information is taken directly from that article. Quote, Chinese top 3 electric vehicle EV startups maintained their strong sales momentum in December to cap a banner year as they snap at market leader Tesla's heels and continue to attract a growing number of young motorists to choose new battery-powered cars over traditional petrol rides. XPeng Motors and Li Auto each posted a record for monthly sales, while NIO once again reported deliveries of more than 10,000 units in December, helping reinforce China's position as the world's largest EV market. The 3 Chinese car makers reported their solid December performance ahead of Beijing's implementation of a 30% reduction of EV subsidies on January 1, 2022. Guangzhou-based XPeng, which is backed by e-commerce giant Alibaba Group Holding, delivered 16,000 vehicles last month, 387 more than the previous record it set in November. Alibaba is the parent company of the South China Morning Post, which is the source of this article. XPeng, which has been ahead of its 2 closest domestic EV rivals since October, saw its total deliveries in 2021 reach 98,155 units, up 263% from the previous year. Li Auto, which is headquartered in Beijing, hit a new monthly record in December with deliveries of 14,087 vehicles. That is up from November's 13,485 tally. The company delivered a total of 90,491 vehicles in 2021, a 177.4% increase from a year ago. Shanghai-based NIO sold 10,489 units in December, which is 389 less than the 10,878 units it moved in November. Its total delivery last year climbed 109.1% to 91,429 vehicles. Tesla's Gigafactory 3 in Shanghai delivered 52,859 EVs in November, according to data from the Chinese Passenger Car Association. The U.S. car maker does not report its monthly sales figures on the mainland. About 21,129 units of Tesla's Shanghai-made Model 3 and Model Y vehicles were exported to markets outside of China. The Ministry of Finance last Friday announced that cash subsidies granted to encourage purchases of new energy vehicles, NEVs, which consist of pure electric, plug-in hybrid, and fuel cell cars, will drop 30% in 2022 before they are scrapped next year. Only NEVs that cost below 300,000 yuan, or 47,158 US dollars, are eligible to receive a subsidy. Most of the premium edition models developed by Tesla and its three Chinese rivals are priced above 300,000 yuan. This concludes the information from that online article. So did I sell my XPeng? I was now in the black with it and thought, with the uncertainty that Chinese stocks face as far as being listed on American exchanges, I believe that it is time to take my profits and redeploy them in something else. The company continues to lose money. Do I think eventually they will turn the corner and make money in China? Yes. At some point, I have no doubt they probably will. Again, if I didn't have any worry about their continued listing in the United States, then I might not have sold, but I think because of cases like Didi, there may well be a risk of forced delisting by the Chinese government. And according to the Yahoo Finance summary page of the stock, it shows that analysts believe that the stock is overvalued at this time. Will I sell my Li Auto and NIO? More than likely. Both of them have similar fundamentals, and they're still losing money. As investments, I'm still underwater in both of them, and quite frankly, a dispassionate evaluation of these stocks in my portfolio might say just to sell them now and put the money into something better. But quite frankly, that is somewhat psychologically difficult, because it then makes the investor admit that they made a mistake in selecting these stocks in the first place. Though again, at one point my NIO was one of my best short-term investments, as it ran up to extremely high levels in a short period of time. Could I be wrong about all these stocks? Could the Chinese government decide that these companies should continue to be listed in the United States, and these stocks in the future rise from where they are now? That is absolutely possible. I don't want these stocks to go down, even after I sell them for my own portfolio. I don't wish anything negative against these companies. I just think that if you're considering buying them, you should be cautious. Certainly in the short term, a rebound play could be made with NIO for a couple bucks, but I think that overall this is probably dead money. But the whole point of investing in stocks is to make money and ideally minimizing your risk while maximizing your gains. I think if you want to buy the Tesla of China, then just buy Tesla, because Tesla makes cars in China and sells cars in China, as well as in the United States and eventually in Germany. Tesla is an internationally well-known name. As a company, it is now profitable and fairly unlikely that it would be delisted from NASDAQ. Obviously, there are potential downsides to Tesla. Its PE ratio is extremely high. Its CEO, Elon Musk, has a tendency to say things on social media that get him into trouble and can affect the price of the stock, at least in the short term. And should the overall stock market experience a correction, perhaps in 2022, Because Tesla sells at such a high PE ratio, the stock could drop quite a bit. That being said, for full disclosure, I do own a handful of shares in Tesla at this time. So I guess the takeaway here is that electric vehicles are now and will continue to be an important growing segment of the personal and commercial automotive industry. Looking at the pure play EV makers in China and the United States, I think that there's just too much risk for American investors in Chinese EV shares listed in the United States vis-a-vis Tesla. Again, if you like this type of content and want to see more, it would really help me out if you subscribe to this YouTube channel. Also, please view my other videos, and if you like them, click the like button. It also helps out if you leave a comment in the comment section for each one. I'm on Instagram at AnthonyRRMills. You can follow me there. Thanks for watching.